think these are really important times to come, and the opportunity is going to be massive. The transition from macro spring into macro summer will take us from 2024 into 2025. But it makes me very bullish on crypto assets. This year, it's been a story of Solana, which I've been long all year. This year has been a flagship year, and I've been telling you a lot of the things that I saw back in 2022. I thought liquidity was going to bottom. I thought the business cycle was going to keep going lower, but the liquidity bottoming was going to lead risk assets, particularly growth assets, crypto and technology, higher. Those were my core bets this year, and those bets have paid off spectacularly. And crypto, that's been a stunning year as well. I've been long crypto. I made the switch, bought Solana into the sell-off last year, and switched my ETH this year, and Solana's up 650%. So it's been a great year, but I think this is just the prequel of what's to come. You see, there's a lot to come going forwards. I think these are really important times to come, and the opportunity is going to be massive. I've got a high conviction that the next year or two will play out, broadly speaking, how I see it. So let's dig in. I'm just going to share my presentation with you. My macro outlook always requires a business cycle framework, because that's really what gives us the juice in the trade. And I'll come on to the secular trends later because they're important too. But the business cycle is really the ups and downs of the economy. So firstly, let's deal with where we are today. Today, the present day, here's the business cycle dominoes that help us understand that present day is where the ISM is today, which is below 50. So we're in weak territory, but not super weak. I thought we'd get a recession. I thought it'd be a mild recession like 1990. I still think we may get a recession. We may skirt it. Doesn't really matter, because as this chart shows, in that kind of gold box, risk assets are way ahead of ISM. They live in the future. Well, we live in the financial conditions index mainly, which is 8 to 10 months ahead, which is why we managed to call the turn so well. And we have stuff like the China credit impulse that lies much further ahead, or also the ISM survey itself. We'll come on to that. You don't need to worry about it yet. The central banks, well, they live in the past. Data they're still looking at is lagging. And so they lag by 6 to 8 months, which is why they're still at peak tightening while the economy is at a trough and risk assets are rising. But what I can tell you is 2024 is going to bring new sparks. The transition from macro spring into macro summer will take us from 2024 into 2025. So we've got a strong year ahead, which is very typical of election years. And also it'll spread to the other asset classes that have been left behind. So it should be exciting and rewarding for most of us. So the moment liquidity improves, it explodes higher. That's normal price action, and it may overshoot these targets. I have no idea, but I use this to keep me intellectually honest. Ethereum perfectly works against the global liquidity index. And again, it suggests that Ethereum may have a really good first half of 2024. The target from using the liquidity indicator would be about 5,300. Again, don't take this as written in stone. It's directionally, we should be coming to all-time highs in Ethereum in the first half of 2024. Let's see how that plays out, but it makes me very bullish on crypto assets. Finally, in the liquidity section, this is our 15-month lead. Because of that global cycle repeating, because of these interest payments, we're in a perfectly cyclical world. This perfectly cyclical world means things become more forecastable. Again, I don't expect perfection, but I expect it to very much follow the path of the past. And that would suggest liquidity is going to keep rising all the way into 2025. And that cyclicality that seems predictable according to the everything code means that all assets essentially correlated. It's all part of the same cycle. Some things lead, some things lag. And that means you almost get no diversification in your portfolio. They're all the same, whether you choose emerging markets, commodities, tech, crypto, it's all the business cycle. So you might as well choose the things that go up the most. That gets me really interested. I've gone from running much broader, diversified portfolios to an ultra concentrated. Because if this everything code is right, this is a fucking gift. It's a gift for all of us. It's the one great macro trade. If that is right, then you should be taking as much risk as you can afford to according to your risk profile. And I'm taking a shit ton for me because I strongly believe in the work that we've done. This is thousands of charts and 30 years of work. I don't see a reason we'll get it wrong, but I'll keep you guys posted if things change. Because you know what? Nothing is perfect and I'm far from perfect. Here's the chart, the long-term chart of Bitcoin since 2013. Some people use this chart longer term, I used to, but the early cycle was so kind of ridiculous that it screws up the chart. Other than that, it's actually a perfect log trend. And as you know, we think the business cycle peaks sometime in end of 2025. And that would suggest a crazy sort of target that could get somewhere between $500,000 and $1 million in Bitcoin. Do I expect that? Probably not, but who the hell knows, right? These cycles can be crazy, and this one feels more like the 16-17 cycle than it does the prior cycle. And that cycle didn't have a lot of central bank printing. Well, not in the US, but central bank balance sheets were rising. We saw 20% growth and what happened of liquidity, and what happened was crypto absolutely exploded. I kind of feel like that's the case. NASDAQ, another beautiful logarithmic trend. I mean, this is a killer. That's all you need to know. Is the world going to be more digital tomorrow than it is today? Yes. Will it be more digital in 2 years' time than it is today? Yes. Will technology reach more adoption in the coming 2 years? Yes or no? Yes. I ran that poll on Twitter. 95% of people agree with me. Yet most people keep missing this trend. They don't want to believe it. It's expensive. I think it's a bubble. Blah, 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 blah. Meanwhile, best fucking trend you've ever seen. It suggests the NASDAQ somewhere between 25 and 30,000 at the end of this cycle. That's another great set of returns. So those are the two mega trends. So it's a really simple thing. You don't have to do a lot. You can be the moron on the left of the bell curve or the genius on the right. Just don't be in the middle of the bell curve. Don't be the midwit. Just keep it simple, stupid. Technology going up. The world is getting more digital. When we look at the Bitcoin chart versus the S&P, it's even more stark. Since 2013, so we're not even cherry picking the really, really early dates, but it's been outperforming at 88% a year. It's crushed it. Now, considering it is also highly correlated to liquidity, it's all the same cycle, then this is the horse you back. You back the fastest horse, which is why my bets lie mainly in crypto. Because they're all the same bet and risk-adjusted returns in crypto are much better than anything else. But you have higher volatility. You may not want the higher volatility. You'll still capture returns. But this is where you get the excess returns. The reason the Bitcoin correlation is actually lower than the NASDAQ is because of these super spikes on the upside, because it's so skewed to the right tail, which is amazing. So now when we put this all together, we can actually forecast using a number of proprietary things we use at GMI out into the future. Please do not expect this to be a crystal ball. Do not expect these exact targets. It's directionally going to give you an idea of what the next 2 years look like. So basically, all you need to take from this is there's plenty of upside to come. Of course, there'll be ups and downs. But in end of 2025, you'll look back and you'll have come a long way. And that is a great trade. With Bitcoin, it gets even more interesting. You see, that gives us a kind of extraordinary set of numbers, which make me think that these are overstating it. So I'm just going to assume that we'd halve these. Maybe they're right. I don't know. We'll have to see. The everything code is new. You know, yes, it's worked in the past, but who knows? Because it gives us crazy numbers like 218,000 by May. That's post-halving, post-ETF. It would give you a target of $500,000 by 2026, which is in line with the log trend. So it's possible. It doesn't feel like the most probable outcome. Feels a bit ludicrous to me. But anyway, directionally, half the numbers. Assume Raoul is a total moron, which certainly my wife would do. Then you still get great numbers. So it's all to play for. And that makes me interested. Now, Bitcoin's actually not the horse I'm going to back in this race. I'll come on to that in a sec. Crypto is the horse I back the most. It's the fastest horse in the race, best risk-adjusted returns, high correlation to this global liquidity index, which is our everything code. So we know how the asset price behaves, which gives us a competitive advantage when we use our proprietary frameworks. Bitcoin is just a macro asset. All of the noise you see from the Financial Times, all the newspapers, to all of the media, to the noise on Twitter, to the naysayers, oh my God, this is magic internet money, this is magic beans, they're all wrong. They're all wrong. Bitcoin is a macro asset, like everything else, works from the same thing. Liquidity, business cycles, secular trend. Global M2, fabulous correlation, Bitcoin. I've been using this all the time. It helped us catch the low in November last year. It'll keep going, as we showed earlier, anyway. So this cycle should keep extending and we'll get amazing rates of return. If the Nasdaq's such a damn good bet, why would I not choose that? Well, because Bitcoin year on year Bitcoin divided by the Nasdaq year on year also follows M2. So when liquidity conditions are rising, crypto outperforms tech stocks. And that's because of the structure and incentive systems built into a tokenized ecosystem, where you're owning part of the underlying network and you get paid for the adoption of the network. Some equities can look like Bitcoin. We've seen Nvidia, for example, see network adoption at scale, and it ends up looking a lot like Bitcoin. But the index as a whole, it will always underperform. So that's why I'm so heavily weighted in the crypto space. In macro spring, treasuries tend to outperform credit. Later, when we move to macro summer, alts, ETH first, Solana, others will start to massively outperform Bitcoin, much like junk bonds outperform treasuries. So ETH is just doing what it's supposed to be doing, but it's not giving us the big surprise. I think that surprise comes the moment the ETF is out in Bitcoin and people will focus on the ETH ETF and it'll bring the ETH ecosystem alive. This year it's been a story of Solana, which I've been along all year, and Bitcoin. That barbell has been the best trade in the world. Or in fact, just owning Solana has been the best trade in the world, bar none. But ETH, it'll play catch up. It'll do well. If you've got cash, you should add. It'll be your last chance to add at decent levels, because then things go bananas. Bitcoin, I think most of you realize, is just a beautiful cycle. The purple shaded are the Bitcoin bear cycles. They're 1 year. That's all they are. 1 year cycle. Yeah, they crush you, but they're 1 year. And then the rest of it just recovers. So as you can see, I think this cycle we're in now looks more like that 2015, 16, 17 than it did 19, 20, 21. But we should keep going into the end of 2025 if we're just repeating the same old cycle, which I think we are, because the Bitcoin halving cycle is the same as the election cycle, is the same as the everything code global debt refi cycle. They're all the same thing. So I don't see any reason why it won't play out that way, and that's what I'm expecting. So good times lie ahead. The other chart I love to look at, is one of the best looking charts in the world, is this beautiful wedge that broke, which is altcoins x ETH, total market cap. We should go to 2 trillion in this. So we've got a 4x plus out of this. It could go much further. These things can really extend. So again, alts, really interesting, really hard to choose. I'd rather farm it out to hedge fund managers. My alts bet has been Solana. I have a scattering of other stuff, but really it's all been Solana to me. I've tried to find the biggest, fastest horse in the race and not try to get cute, because I find it too hard and you end up fucking it up. And the whole idea of this crypto cycle is do not fuck it up.